Good morning, everyone. I'm coming in from Cape Town in South Africa, and we've got Craig Warwick with us as well. And today we're going to be talking around the UK Property Hotspots. So just a quick message from me. Thank you very much for joining us. Wherever you're coming in from the world, we've got a few people that signed up to join and registered from all over Africa, one or two in the UK as well. So thank you very much for joining us. And if you've got any questions, you're welcome to ask in the chat room, and we'll try and address those if we don't answer them already throughout this chat. And also there will be a recording of this, so if you do need to step out or you'd like to come back on something, we will be sending a recording out to all the attendees and those that registered for this event. So just from a housekeeping perspective, that will take care of anything you might have missed or would like to revisit. So I'm going to go straight into it. We're going to try and keep this into a informative sort of half an hour, bring you up to speed with one or two areas. We did mention Derby as a UK property hotspot. We're also going to touch on Birmingham as well, and then also obviously the opportunities that sit within those. So I think we're going to dive straight into it. First of all, welcome to the audience again, and Craig Warwick from Mews. Thank you very much for joining us today.
Good to be here. Thank you.
Okay, great. So let's start off really. Sorry, my slides have just jumped a quick second there. Apologies, I'll bring that back now. I'm having a small technical issue with my slide deck. Sorry, apologies. Okay, there you go. So if we just go back to revisit very quickly the principle of really why to invest in property offshore. From our perspective, from a Carrick perspective, we obviously focus largely for our clients with reference to the various asset classes in offshore from our perspective, and one of them is obviously those asset classes is property. And the question is, well, why do you want to invest in property versus other traditional asset classes? And primarily, as we've said before, is that it's a much less volatile asset class, and it's a much more tangible, stable asset class over a period of time. So we generally find a lot of our clients that, and mostly understand bricks and mortar against traditional other asset classes, they tend to feel more secure, especially from a less risk-averse perspective, but also having a more balanced portfolio and providing diversification to that portfolio as well. And I think that the most important other one, besides the obvious ones where we talk about economic and political stability within those jurisdictions, and the long-term wealth generation, is also if we look at the currency exposure components and then the leverage and the low cost of finance. So, for example, if you've got £100,000, you can look at with the right loan to value and the right bond structures, you can look at having an asset of around 250,000 as an example. So it's not just simply saying, okay, well, I'd like to invest 100,000, off we go. You can also look at increasing that asset value by using the bank's money and qualifying for an international mortgage as such. So if you're going to the UK as an example, or Mauritius, etc. So there are opportunities to leverage the finance vehicles available to us, and then also understanding, for example, and we'll talk a little bit around inflation and the cost of leveraging a little bit later when we get into some of the products and discussions with Craig. But certainly looking at, as in South Africa, our current, we're probably going to have a potential increase in the base rate today, and that is happening as a trend because of inflation throughout the world. But also understanding that it's almost half from South Africa to the UK. So when you look at those things, it's important. And then obviously from offshore as a general scenario with the currency exposure, if we look at the rand as an example of the local currency from our perspective, it was 10 years ago was 12 to 1, and it's now 20 to 1. So you've got to look at all of those aspects as why would you invest in international property and why would you invest offshore in general. I think just from a property perspective, as I alluded to, it's around sort of increasing your asset value in terms of leveraging and using the low cost of finance and then also having a more tangible, stable asset class. Obviously, if you'd like to get into more detail or would like further information on this conversation that we sort of touching on, certainly get in touch with myself or Craig, and we can talk you through some more of those aspects of it. So just, I think importantly, one of the other aspects of as well, besides what you're seeing on this slide, is really just about the credibility of the partners that we work with and their track record. So I think, Craig, this is obviously where you come in, and we talk about a little bit about the history of Joseph Mews. Do you want to just highlight and take us through some of the key points?
Yeah, absolutely. Thanks, Scott. Yeah, the group as a whole started in 2001 by our CEO, Andy Foote. Around 10 years ago, the company joined SevenCapital Group, one of the largest developers builders in the UK today. And we started trading at Seven Invest. And essentially, we act as the exclusive distribution channel, everything from marketing to sales to end completions and obviously handover with our clients. And that encompasses the customer service element of our business and offering, which is really key to the customer experience and the after-sale service that we pride ourselves on. And that essentially that arm of the business, of the process, makes up around 30% of the overall development process itself on the back end. We've delivered close to £900 million worth of buy-to-let property, and very proudly have around 2,500 plus clients. And the important takeaway from that is essentially, I would say most of our clients, a very high percentage of our clients are portfolio clients. So they walk a long road with us, and they look at building their portfolio with the Joseph Mews Group and relationship in play. And then, yeah, just moving on to the next slide.
Yeah, sorry, just having a little small technical issue with the slide deck at the moment. It's going very quickly, sorry.
No problem.
There we go.
Yeah, so just a bit of a visual snapshot, top left-hand corner, as I mentioned before, close to 7,000 units, residential units delivered to date. Those are completed, handed over investment properties. 20 years experience in selling luxury UK apartments to the investor market, close to £900 million, as I said before. And then again, the 2,500 plus existing clients. The important takeaway there, just to reiterate again, is the fact that these are clients that walk a long road with us. In terms of the delivered developments, and this essentially is our track record and the importance of the slide. Essentially, as you'd imagine, when you're looking to partner with or find a partner in a foreign market, you definitely always look at the track record. From our side, 100% track record, 17 developments delivered to date with a value of around £600 million. So 100% track record, and we're very proud of this fact. Moving on to the next slide.
So I think
in terms of development,
sorry, Scott, to interrupt there, but I think this is quite an important slide, because this obviously is your current developments in progress, and in some cases, one or two of them are pretty much complete already. And so for the audience that's on today, I think which is a new opportunity is that we've got some of this has released some of the developer stock. So as an example, the Grand Exchange was a very popular development that sold out, except for some of the units that the developer held back, and those have now been released. I mean, in terms of completion, where are we with completion on the Grand Exchange in terms of a percentage, Craig?
100% on track in terms of completion. In terms of available stock, to your point, there's around 20% of the stock that has been released by the builder, and that is now available through the Carrick and Joseph Mews relationship to clients. I think the importance, to your point, of the slide is the fact that, and we'll get to later slides, we not only have a range of really, really strong off-plan developments in construction phase that clients can look at, but also developments that are nearing completion quite soon, mortgageable, and then completed stock. So if we have clients, if there are clients out there looking for potentially immediate returns on money laid out, We have completed stock in most cases already furnished and let, that'll give them immediate yields. The likes of Metalworks, as you can see there, that's on the commuter belt just outside London in Slough, on the Crossrail system. Grand Exchange, to your point, is in an area called Bracknell, the Silicon Valley hub for the UK. Massive tech firms established there. It's one of the highest average earning per capita earning regions throughout the UK. So a very strong tenant base, very stable tenant base, and there's a massive demand for these types of developments in these markets because the existing stock is quite aged. So these guys are looking for modern developments, all the amenities, the private gyms, etc., and that's what the stock has to offer. So yeah, this slide is incredibly important because it highlights the availability of options that are open to clients.
And just sort of some key points, what sort of price ranges are coming in on the new developer stock? What does it offer in terms of 1 and 2 bedrooms or studio stock in those price ranges? And then also just a ballpark figure on the type of gross yield you would receive.
Yeah, so if I use Grand Exchange as an example, large development, £70 million, 181 units in total, 2 adjacent blocks, ultra modern, as you can see in the picture to the right. There you're looking at around £299,000 for a 1 bed, size around 50 square meters, so a nice size for the UK, floor to ceiling windows. These are really high spec apartments, £299,000 entry, fully mortgageable, and there you're looking at gross yields of between 5 and 5.5%, net of around 4.5%. What we have seen, interestingly enough, in this market, we completed a previous development, number 1 Thames Valley, at the top of the list there. Our projected figures were around 5% gross yields, and we came in at 5.8, which just speaks into the demand in this area for modern style developments like the Grand Exchange. So there should be upside to that. Conservatively, to your point, is 5.5% gross rental yields, and very strong cap.
So I think just going back to, you know, where sometimes we have got clients that are very risk averse and they're wanting to rather get into something that they can see that's complete, so they might not necessarily get the capital growth of the period of the capital employed. So for argument's sake, your 20% deposit on your capital growth on that over a 2-year period, and they might be willing to forego that and rather get straight into a product which is completed and done and is tangible and can touch it, and get straight into it. So I think that there's that option as well, to either add to an existing portfolio where you're wanting something to kick off straight away with. So I think that that's important for the audience to understand that we've got different aspects of completion throughout the process and availability of stock. So just depending on your appetite for risk or what you would prefer to have in your portfolio, please get in touch with us and we can take you through some of these developments and what's available.
Absolutely.
Okay, so I suppose just going back to the conversation around a little bit more about Joseph Mews and just your reach and in terms of size of offices, etc.
I think the important takeaway from the slide is essentially South Africa. The fact that we've got localized offices on the ground in SA, looking after Southern Africa and Mauritius as a whole. What that means for the clients, essentially, they are speaking to someone on the ground. We understand the market locally. We understand some of the challenges locally, which is very important. And yeah, it makes for a smooth, facilitated process for the clients.
And also just from a UK perspective as well, we've got the Birmingham office as well. So that's also
correct.
Where somebody can, if you wanted to see some of the developments there, physically you can meet somebody on the ground, etc. So I think that's also an important component to as well. I think another thing which I alluded to earlier, which when I introduced you was obviously the track record of partners and trusting the partners that we work with, and obviously we go through the usual, not just a tick box exercise, because that would, but really looking at the track record and the developers and what value adds our partners bring to the table. And obviously from our perspective, it's a combined package of, from the moment that you start looking for property all the way to putting a tenant and then selling it eventually if you decide to do that. There's a full bouquet of services all the way through that journey, and that's why we partnered with the likes of Joseph Mews. But really, take us a little bit about what makes you unique versus some of the other developers.
I think essentially and you touched on it now, the fact that we partner with our clients through the entire transaction process and thereafter for a 2-3 year period after completion. And what that means for the client is essentially, there's a level of peace of mind and security that not only will the development be completed, but more importantly, that once it is, we're there to hold the client's hand and ensure that it is successfully let out at the rates that we stipulated and projected initially, if not more, as I mentioned in previous slides, and that they're taken care of and their investment is taken care of on the ground in the UK. And with our local UK offices, as you mentioned, we've got strong partnerships with the letting agents, and ensure that there's obviously service delivery in place as far as that's concerned.
And then I'm just going on to the SevenCapital relationship as well. As you know, we know that they built the Grand Exchange as an example.
Yes.
So we've partnered with that. Obviously, that they have quite a large new movement towards sort of some of the London stock in the portfolio and sort of slightly more premium luxury prices, so that you've got a bit of a nice balance of stock. So they've got quite a premium offering at sort of obviously higher pricing in certain more mature markets. But I think that's also because a lot of the clients within those want specific flagship properties within their portfolios, as an example, but also understanding we've got offerings in Derby, Birmingham, and not just sort of the main areas of London, as an example. I think that's the key component out of this, if I'm on the right track there, Craig.
Yeah, absolutely. I mean, to your point, SevenCapital have delivered 100% track record, as we saw before, and they are the biggest developers in their price range and in their areas. Areas being the commuter belt around London and Birmingham predominantly. Yeah. And to your point, they have made a decision to venture into the top end of the market, so your prime central London properties. And through this relationship, we would still bring that to market through Carrick, and obviously that would be available to the investor base.
And then when we move to the likes of some of our other development partners, this would speak to the Consortia Development developers, and what they're offering is there, for example, would be the likes of the Derby opportunity, as an example.
Yeah, so Consortia, fantastic bunch of guys, to be honest, to call it what it is. Very forward thinking. Their developments are positioned perfectly in line for the specific tenant base in a specific area. And we'll touch on some of the opportunities as we go, but essentially this would include things like exposed brick, exposed beams, New York style apartments. So really, really attractive offering in markets looking for those specific design elements. And their locations as well in the specific markets are prime. For example, on the canals in Birmingham, they really pick out the best address in all of the options.
Okay. So I think, part of what we're doing here today is obviously, besides just talking about why property offshore, which is obviously on the agenda, and just confirming the trust elements on who we partner with from a Carrick perspective. The main reason you're here from our perspective today is the UK market and some of the hotspots in those areas. And I think it's important for us to touch base on, you've got like the rest of the world with things happening that, from a Ukraine and Russia perspective, and the impact that has on the rest of the world, along with the fact that we've got rising costs and in steel, timber, developers under pressure from a cost perspective, and then on top of that, we've got inflation and increased base rates as well. So there's a lot going on, but at the same token, we've also seen a very positive result coming out of COVID, and from at the height of COVID, and I think there's a couple of very important slides ahead that will sort of show what that has produced and why. And I think this is where, you know, it's a good conversation to bring in. What we're comparing here is the national market within the UK versus some of the opportunities that we allude to, like the Derby and the Birmingham, and how those compare to the national averages that we've seen. I think that's, for me, really the crux of this conversation, if you agree with that.
Absolutely. Absolutely.
Okay, so if we look at the, sorry, my slide deck is playing games again. So the UK growth forecasts, let's talk a little bit about the three areas that you've highlighted there, and if you want to go into that.
Yeah, absolutely. So looking at an independent study, and we do a lot of in-depth investigation and studies into each area across the UK, always making sure that we're going into the right area, as I mentioned before, with the right product at the right time, which is key to getting it let first off. But also from a longevity perspective for our clients as far as investment, those good things. Looking at Savills independent body in the UK, some of the studies they've done, and the importance of this, just to highlight something that isn't reflected on the slide or shown on the slide. There's a lot of money being spent in the UK, and you can clearly see it being spent in the West Midlands and the East Midlands areas and along the commuter belts outside of London. Now, London always has been a great address. It's always been a bustling key city throughout the globe. And there's always an investment case to be had in London. That said, it is hellishly expensive, as we all know. So it isn't necessarily predominantly investor stock. It's more owner-occupier or own-use stock. And that's really the kind of unique situation in London. As far as money being spent, as I said before, we've got the Crossrail system, for example, along the commuter belt, £20 billion worth of rail upgrade connecting everything from Reading commuter belt into the heart of London and to Heathrow, the likes of Bracknell on that line, the Silicon Valley. So that's the importance of money being spent, and that's a key indicator of where you should be looking as far as investment goes. The same is said with the East Midlands, with the West Midlands being Birmingham, as an example. Average property price £267,000. By 2025, there's a 24% projected property price growth in the East Midlands, and the same is shown in East Midlands, being the likes of Derby. What we're seeing there as well, as far as money being spent, indicators as to where you should be looking as an investor. You got the HS2, the high-speed rail, massive amount of infrastructure money being spent, and that's going to connect the likes of West Midlands, Birmingham to London within a 40-45 minute journey over the next couple of years. That essentially makes Birmingham, which is already the second city of the UK behind London, it makes it a suburb of the capital. Gives you full connectivity within a matter of minutes. These are massive indicators of where we should be focusing, and that's why this projected growth is coming through so high in comparison to the rest of the UK as a whole.
And what's quite interesting is if you look at the Midlands and the East in terms of around 250, 270,000 average pricing and a forecast of just under 25%. You go into the Southeast, you start to see a slight taper off where you've got average property prices around 460, which are significantly higher than the West and East Midlands, but you've got a 19% increase. So it's, you know, if you do the maths, you would look at it and you'd go, okay, well, we want to try and get into these more emerging West Midlands and East Midlands markets versus the Southeast, unless it depends on what your portfolio objectives.
100%. And looking at, sorry.
No, you finish, sorry, carrying on.
Yeah, I was going to say, over and above the connectivity upgrades that we've spoken about, Crossrail, HS2, if you look at East Midlands, West Midlands, Birmingham, Derby, respectively, Birmingham, as an example, has what's called the big city plan underway, £8 billion worth of regeneration taking place in the city. That's over and above the connectivity upgrade. So there's massive amounts of money being spent, and investors, as you'll know, and as everyone knows on this meeting, or the Zoom rather, investors want to get in as early as possible in that growth curve to enjoy as much as possible of that cap appreciation along with that market. Yeah.
So I think this next slide is quite an interesting one, because obviously it looks at the property price growth dynamics of over a 15-year period, and if we look at going all the way back, which is more than if I look at that, I think this graph somehow is a little bit more than that. Sorry, I just realised it says 15 property growth, but we've actually got it way back than that, so there's an error there. Apologies. But if you go back, let's just go back approximately to 2000, and if we look at from 2000 how we had quite an extensive growth period up until about 2008 and 9, and then we had a correction in the market as we did in 2013 and 14, and then it started to have an increase as we've seen up until 2021. So we're still seeing property prices, if you take that overall curve, it's still over a 15-year period, almost doubling over a 15-year period if you look at this graph on this stretch. So if you're buying in and you're putting in 100,000 and you're purchasing something for 250,000 over a 15-year period, you should essentially have a double value asset figure on it. And I think that's what we have to look at overall if you look at this graph. Would you agree with that?
Yeah, absolutely. And the importance here, I think, as well, is looking at the 1988 to 2001 segment. It's 13 years. The following is 14 years. And then as what you mentioned, we're currently tracking from 2015. We're currently tracking to a 15-year doubling in value. The importance, the backstory to this is also making sure that you're going into the right markets throughout the UK. As we mentioned before, looking for these indicators where there's money being spent, regen, connectivity upgrades, all of those good things. And all of those elements, along with this history, will clearly show you that you will see the doubling in value of your property over this period of time.
Yeah. Okay. If anybody's got any questions, they're welcome to ask. From our perspective, I think the important thing there is just to make sure you can see what. Sorry, my slide deck is really all over the place. I don't know what's going on. Okay, I'm going to just let it do its thing for a second. I'm really struggling with the slide deck. Apologies for the technical error here. Just have a look here. Sorry. Okay, I think let's try and move on quickly. I'm just also conscious of time as well.
Yeah.
But if we look at the concept of what we said just from a national perspective as well, we've got two offerings in terms of opportunities, and if we look at the opportunity from a what's happening in Derby and what's happening in Birmingham, maybe if we can talk through that at the moment. I'm just going to ask our lady Simone, who's also running this behind the scenes, just to take control of the slide deck because it's clearly not working for me at the moment. So if you can, Simone, just please sort that out for us and let me know if we can't. But I think let's just talk overall. If we look at any opportunity, and you spoke about investment into those different towns or cities, historically we would look at a couple of things. We would look at, as you mentioned, is how much money is going into it and where is it going in and what's being spent and why it's being spent. And typically you would see that as an example, connectivity, so reducing travel time to major cities within the UK and Europe, as an example. So connectivity plays a big part. You also have regeneration projects within the cities, then investing into various aspects from infrastructures as well. And then, from a thirdly perspective, you'd look at, well, who are the current employers, who are the employers coming into those market areas and why. We will make the slide deck available, but from that perspective, on those three key aspects, let's talk about Derby and then very, very quickly talk about Birmingham as well.
Absolutely. Yes, so if we can, Simon, just go back one slide, if possible. There we go. Okay, that's perfect. Right, so just looking at Derby, obviously East Midlands, as we mentioned when we looked at the regional growth and predictions across the UK. So East Midlands will have access to the H2 system, so we'll be connected to the likes of Birmingham, to the capital as well. And currently looking at Derby as a city, 800,000 rail catchment, and 6 million people live within an hour's travel from the city. There are, in addition, or building on what you said now, Scott, a very important point to note when you're looking at an area is what are the commercial indicators? What's happening on the ground as far as commercial activity and commercial opportunity? And Derby has a lot to offer. The likes of Rolls-Royce, headquartered in Derby as an example. That is the profile tenant that you're looking at. There's also £3.5 billion if you look below there. Masterplan, city master plan, taking place over the next couple of years, over the next, call it 6, 7, 8, 9 years. And that's going to change the face of Derby. Already a beautiful city, you know, cobble streets, etc. A lot of greenbelt areas in the surrounds. So there's a lot going on. Important to note, we speak about the commercial drivers. If you look to the right of this slide, 46% of graduates choose to move to the city once they've completed their studies. And that speaks into the opportunities commercially in the area. And obviously that will feed into the tenant demand.
And then drive to the age of the population under a certain, you know, in this example, 48% of them are under 35. So it talks to the graduate component and also looks at the employment opportunities that will sit with it. I mean, I think that's, and then as you said, that talks directly to the tenant mix, the type of client, the type of tenant that you're looking for to have in your property, a young professional, and you know that for also looking at the kind of what that does from a rental demand and supply perspective as well.
Exactly. And if you look at the lower left, 48% of Derby's population under 35, as you said. There's a stat in the market where the first-time home buyer in the UK, the average age is 35 plus. So this pocket of, call it grad to up to 35, this really is generation rent. These guys want to rent properties, they don't want to purchase. And this opens up the opportunity, obviously, for investors in properties in this area.
Yeah. Simon, can you move to the next slide, please? So again, talking to sort of just some key highlights here in terms of by train and by car. You know, we're looking at, in some cases, you know, reaching London from Derby in 52 minutes once this is complete. Currently, you know, those kind of areas that will, in some cases, almost half the travel time. So I think that's the key aspect here. You know, some people on this call might know where London is, but they're not know where Leicester is. So, you know, but I think the key note around this is by train, you're looking at almost in some cases halving some of the travel times, and then with the infrastructure upgrades as well, you know, you're looking at reducing some of those travel times by car as well. And I think that's the key message from a Derby perspective as well, and that HS2 project, which obviously runs anchored mainly in the East Midlands, but it all, you know, you're also looking at where it will touch on Birmingham as well from the upgrades that are going in from that perspective. Let's move to the next slide, please. So in short, we just thought we'd talk about the actual Derby opportunity in terms of what we've got from a development perspective. So we've got a development there that we can certainly talk about. And I think we're just really the three things that we'd like to talk about is price points, so what is available from a price point perspective, and what sort of 1 bedrooms and 2 bedrooms are available. I know we've had quite a sale on the 2 bedrooms are potentially sold out on the first phase. So we've only got 1 bedrooms at the moment. Price points on the 1 bedrooms?
Price points on 1 beds in this market around £184,000. That would give you a 45 square meter apartment in a private development with all the amenities and good things that go along with it. Important to note, at that price point in this specific market, you're getting a brand new build, and the balance of stock in the marketplace is quite aged. With that young market coming through, that grad market, as we know, this tenant profile, these guys are looking for something modern, they're looking for something new, slick, with the amenities. So again, it speaks into the right product in the right market at the right time.
Okay, so for those of you that are interested in Derby, please get in touch with us. My contact details are there, or you can get in touch with us directly from the webinar receiving as well. But I think the important thing to notice is that, you know, as an example, the 2 bedrooms in the first phase are already sold out. The 1 bedrooms are moving reasonably quickly, and they offer good value, coming in at around £185,000, £185,000, and also just understanding the dynamics of what we spoke about, you know, the commercial elements, all the regeneration projects and everything that's added into that. So if you are interested, please get in touch with us, and we'll take you through the exact, you know, the investment case, the cash flow summaries, etc. So you can look at exactly what the costs are, and what the gross and the rental and essentially the profit and loss and cash surplus, depending on how you gear it. So if we move on to the next slide, and we're going to talk briefly about investing into Birmingham, and why Birmingham. So again, we'll just talk about, on the next slide, we'll just talk about some of the elements that we spoke about, like Derby, where we talk about why Birmingham. So I think let's just touch on this one, Craig, and from this perspective before we move on to the next slide, because there's quite a lot happening in Birmingham.
There's a lot, absolutely. I think some of the key indicators, and I won't forbade to read through everything, but just to give you guys a bit of a landscape snapshot. So Birmingham is officially the 2nd city in the UK, behind the capital. As I said before, there's between 8 and 9 billion pounds being spent. It's called the Big City Plan, and that spans across all sectors. So it's leisure, it's retail, it's commercial, residential. There's a ton of money being spent in Birmingham, and you can see it when you go to the city today. The financial firms, all the big financial firms, have moved their headquarters from the capital to Birmingham, and they've obviously got a view of the connectivity coming through with HS2, connecting them to the capital and international travel, etc. So your likes of your PwC, Deutsche Bank, all the big financial houses and auditing firms are now headquartered in Birmingham, in the city centre. It is definitely one of the younger cities throughout the UK. So again, you've got your kind of 25 to 35 age group, I think makes up the majority of the population, over 1.2 million people. And there is a very strong demand for modern properties. There's a culture of wanting to live in the city, not on the outskirts anymore, because of all the elements that the city has to offer, both commercial, leisure, nightlife, pubs, restaurants, etc., retail. So there's a lot going on. As far as the opportunities go, we have a stunning development on the canals, which is probably one of the nicest addresses in the city, definitely. Price ranging from around £290,000, slightly larger apartments, exposed brick, exposed beams, New York style floor-to-ceiling windows. And these are the types of elements, design elements, that you'll see in this type of market. So yeah, we're catering for your financial execs. In addition to that, we have some completed developments, going back a couple of slides, that we can look at if clients are looking for immediate returns, potentially own use. Some of the drivers in the city as well, important to note. The Queen Elizabeth Hospital in Birmingham, 27,000 medical professionals. That is one of the best tenant profiles by nature and from experience, as well as obviously the financial professionals in the area and tech. So there's a wealth of tenant demand for good new stock, and it's just a hustling market.
And I think, you know, moving on to this next slide, you know, if we look at you know, UK's from since 2016, I think it's the UK's fastest growing city since 2016, if I stand corrected. And if we look at some of the rental growth, that you've got a figure there of predicted growth by 12% up until 2024. But if I recall correctly, we had a 20% growth up until 28% growth around 2009 to 2020, which was significant from a rental yield perspective as well. And I mean, some again, we spoke earlier about forecasting the property price growth. Here we're sitting with exactly what we spoke about, the 24%, so the opportunity in terms of what it's going to do over the next few years. And we've still got a population of under 40% under 25. So we've still got a lot of young professionals, and that shows as well with the graduates in the city and the larger businesses moving into the second city of the UK.
Absolutely. And if you look on the top right-hand side to build on the 40% under 25, 60% of Birmingham's rental market is under 35. So again, this is the perfect market, the perfect kind of.
I think that's a very important stat. Yeah, it's a very important stat because it shows there that you're going to have longevity in the tenant mix and the tenant market. When you take the 60% of the rental market being under 35 and the population of 40% being under 25, there's still a lot of coming up through the ranks, if I can call it that, of people that are wanting to rent up until a certain period before they feel strong enough to wanting to enter and buy into those markets. So I think, in short, if we've just touched on these, and I think the purpose of that is we just wanted to highlight some of the key aspects of what these opportunities and why we've chosen these as some of the hotspots in the UK property market. And I think, I haven't got any questions at the moment on the list, but I think we've covered quite a lot of aspects of the hotspots and the two hotspots, and then also just comparing how those go to essentially the national market in terms of what it's doing and the updates within the UK market, and comparing those directly to the growth in these two hotspots we mentioned. So from our perspective, I think I'd just like to thank everyone for joining us today. I'd like to thank Craig from our perspective, just for again being a trusted and preferred partner and the services involved. And then I think the important thing to do is to look at where you are in your journey, and from a property perspective, how does that fit into your portfolio, and how can Carrick support and help you through the likes of Joseph Mews to get you into the right property at the right time. And if you've got any questions, you can see my details on the slide below. So please give me a shout or contact us directly. We will be sending a recording. So thank you, Craig, and thank you to everyone that joined us today. And we'll see you next time. Thank you.
Thank you, Scott. Thank you, everybody. Have a great day. Cheers.